day, students. Welcome to Accounting 1329, Payroll and Business Tax Accounting. This is Dr. Mercado speaking. And in this lecture, we are continuing covering Chapter 6, which deals with analyzing and journalizing payroll. In this particular lecture, I am going to be covering Problem 611A. Okay, so problem 611A is a very simple problem. It should take us maybe 2 to 3 minutes. I just want us to understand the concepts of what we are doing. Okay, so we are putting money into a whole bunch of payable accounts. Okay, we are putting money into our FICA taxes payable, into our employees' federal income tax payable, our state income tax payable, a whole bunch of payable accounts. Okay, so what does that mean? We're putting money into an account so later, at a later point in time, we can take that money out of that payable account and remit payment to the different taxing entities. Okay, so in this example, we have on December the 31st, Shank Company has a balance of $98.75 in the FUTA taxes payable account. This represents the employer's liability for the fourth quarter taxes. Okay, we have to journalize the entry Shank Company needs to make in January to record the last transfer or the payment of FUTA taxes. So, Shank Company needs to pay the federal unemployment tax. So they've been allocating the different taxes based on each of the pay periods, and they've accumulated $98.75 into the FUTA taxes payable. Okay, now let me do like a little T account here. Okay, that way we can kind of like see what is it that we are talking about. Okay, okay, so this would be let me insert a cell here. So that way we can just see how it looks. So we have FUTA taxes payable. Okay, FUTA taxes payable is a liability account. Okay, this is a liability. Payable, liability. We owe this money. This money does not belong to Shank Company. This is money that belongs to someone else. We're going to pay it to someone else. The normal balance of my liability account is a credit. Okay, payables always have a credit balance. So currently I have $98.75 sitting as a credit. Well, let me put first debit credit. That way we know what we're doing. Okay, debit credit. Here we go. That way we can see what our balance is. Okay, so I've got my FUTA taxes payable account. Okay, and I know that if it has the word payable, my normal balance is a credit. So that is where I have the $98.75 sitting right now. Now I need to remit payment to the different taxing entity, so I need to take the money out of my account. So when I take the money out of my account, I need to debit my account $98.75. This would be the entry that I need to do to remit payment for my taxes. So that way my balance is going to be left with 0. Okay, so basically I started off with $98.75. This is my beginning balance. Okay, and then this is when I remit the payment. When I make my payment for my taxes, I debit my account. When I debit my account, my FUTA taxes payable goes to 0. I had $98.75. I took it out. Now my balance is at 0, and I start accumulating new entries for the next quarter. So this particular tax is paid quarterly. Okay, so now we have to record the entry. Now we've identified that I need to debit my FUTA taxes payable to take the money out of the account. So this is happening as of December the 31st. Okay, so I take the money out. I am going to debit my FUTA taxes payable. I'm going to debit it for $98.75. Now, when you make a payment, how do you pay? Okay, so I need to submit payment for my FUTA taxes. How do you pay your payments, your bills? You pay your bills with cash. You can either send a check or do a direct transfer. A lot of these payments, you can do them online. So you just go in there and submit payment. So regardless of the method that you use, your cash is going to be used to make that payment. Okay, so cash is going to be credited. $98.75. Okay, so what are we doing? We're taking the money out of our payable by debiting our payable. We take the money out with a debit, and then we pay with cash. Okay? We are making our payment with our cash in our business. And this is, like I said, you can remit payment via check, electronic, whatever is it, or however is it that the taxing entities prefer to receive the payment. Okay, but that is basically very simple. The entry that you would need to do: you debit your Vita taxes payable, and you credit your cash. Okay, make sure that you understand the normal balances of the accounts. You should know that a payable is a liability and it has a normal balance of a credit. Okay, and you should know that when you put money into the account, you accumulate all of the credits until you reach that total, the ending total. And then once you get the ending total for the quarter, you're going to debit that amount that you have sitting on your account and send the payment off to the Federal Unemployment Tax Office. Okay? So that is basically it. Fairly straightforward, very simple problem. I just hope you understand. And this is how all of the other accounts work. You put the money into each account. So every account is on its own. So we're going to have one for FUTA taxes. We're going to have a SUTA taxes payable, a FICA taxes payable, a federal income tax payable, a state income tax payable. It doesn't matter the title of the account. If it's the payable, it's a liability account. And when you put money in, you're going to credit. When you take money out, you're going to debit the account. Okay? So that is how they work. Okay? So I hope this is of help to you in understanding what is it that we're doing. When we are running our payroll transactions, we're taking money out. We're recording an entry to put money into our payable. And then we can, when the quarter in this particular case is over, we take the money out of the payable and remit payment to our entity that we need to pay. So that is basically it. Please make sure that you read the chapter in full so you can be comfortable and familiar with the content. And until next time, have a wonderful day.